Hello everyone, thanks for joining us today and welcome to this educational presentation of 2 simple steps to help maximize your trading. You know, if there's one thing I've learned in over 41 years, it's that trading is really simple. It really does not have to be that complicated. And the only reason it is complicated is because we as traders make it more complicated than it has to be. For some reason, we've been all taught that the more complicated, the more convoluted indicators, the more things you pile onto your trading plan, the more successful it will be. And in all actuality, it's the exact opposite. That's one thing I've learned. That's one thing my mentors taught me. And I'll show you that in today's presentation. For example, we're going to be talking about one of our most consistent strategies today, strategy number 4. It is a strategy I was taught years ago on the trading floor of the stock exchange, and I've been using in some capacity every day now in my trading. Now, some of the highlights of this particular strategy is that it's virtually for anyone. It doesn't matter whether you've been trading for 30 years or for 30 minutes. Everyone gets the same basic format, and then we work out from there to meet your needs. Now, it was originally designed for traders looking to catch quick momentum moves. When I was on the floor of the exchange, I was in a trade for 2 or 3 minutes, and I'd get out. So that's what strategy 4 was all about, but we have devised ways to stay in, weeks, months, even years if you like. Now, the intensity level is very moderate, number 2. If number 1 was the most intense of all strategies and number 3 was the most relaxed, it's right in the middle in number 2. It only uses one indicator. That's how simple it is. So it's not a very difficult trading method. Now, the beauty of strategy 4 is its ability to transfer over onto any time frame, any direction, and any market. So today in the examples I'm going to be sharing with you today, I'm going to have a bias towards actual stocks, looking at stock trading. But remember, it can be used in any market, any direction, any time frame. I personally like to use it in intraday E-mini trading. Now, if you're a member of our strategy number 4 course, you receive automatic buy and sell indications. That's where you get the up and down, the green and red arrows. But please remember that these are strictly for educational purposes only. As I stated in the introduction, we are first and foremost an educational company. This is an educational presentation. So what does that mean? It means that our only goal is simply to educate you and to provide you with tools and techniques to educate you so that you can make your own decisions. So we don't want you using these up and down arrows as a means to just blindly take orders and take signals. That wouldn't, produce anything, and you'd most likely lose because you would have no idea why you're entering orders. We teach you what to look for, and these arrows are simply a way of checking your work to make sure that you adequately spotted a strategy number 4 generated signal. Now, our edge at specialist trading is consistency. I'm not going to promise you that every trade is a winner. And that wouldn't be real because there's just nothing in life works and wins all the time. It's just a known fact. So don't let anyone ever tell you that they have a method or a system or strategy that never loses. It's just not that way. The beauty of a method is when it's consistency. In other words, when you have these losses from time to time, a consistent method will have the ability to make it back, often rather quicker than later. So that's what we're trying to instill in all of our methods and in you, a certain level of consistency. Now I want you to look at this trade right here in PSX. All right, someone looking at this with traditional wisdom and the way most traders are taught say, well, there's no real action here, Steve. We're basically just looking at 7 to 10 bars. I can't get any clear direction, and we're in a sideways market. Well, with the technique I'm going to be sharing with you today, I'm actually going to give you 2 of the basic rules of strategy number 4. You could have seen that a buy signal was generated here, and then another one here, and another one here. So even when the market appeared by conventional wisdom to be going nowhere, the actual stock was telling you it wanted to go higher. In fact, it went up 16 points in the next 2 weeks. Those were actual strategy number 4 setups, and I'll show you 2 of the rules today that generated those signals. So that's our introduction, and I'm also going to share with you, by the way, some consistent signals where they didn't actually work out for the best. For example, this was a nice trade that was generated, and as you can see, another one was generated. So you think to yourself, well, gosh, that was a great first trade. I'm going to get back in, and then you would have lost. So how can we increase our odds for success even more? Well, I'm going to share with you an added advantage to this where we'll share an extra bonus technique that will increase your odds for success that would have kept you out of that second trade altogether. And we're going to show you how simple it is in applying all these using our new PTS Primo charting platform. I developed this with proprietary strategies, and we make everything which I've just described to you, strategy number 4, how to generate signals, how to identify with this tool that will give you an extra added advantage. one click away. So it's all right there for you on a new educational platform that we feel you've been searching for. Okay, so that is our introduction, and welcome. My name is Steven Primo. I'm president and founder of Specialist Trading, and once again, let me just stress that we're a little bit different from other webinars you may have attended from other companies, and the fact that our only purpose is to educate you. We are first and foremost an educational company. We don't promise to have the best system in the world that never loses and generates thousands of % per year. We don't promise to tell you what market to trade or what time frame. We don't believe in that. In fact, we actually believe that those things are what keep you from being a successful, consistent trader, by relying on what someone or something else is telling you. Our goal is simply to provide you with sound fundamental education that has stood the test of time, and then work and mentor with you so that you can ultimately be in charge of your own trading decisions, so that you won't have to listen to what anyone else is saying or anyone else is touting the perfect system, the perfect market. You can decide for yourself with the tools and techniques we teach you. Now, I've been trading for 41 years. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for actually 16 years, and out of those years, I was a specialist. That's where we get the name Specialist Trading. A specialist just is someone who specialized in making markets in roughly about 50 or 60 stocks. So I made markets in IBM and Waste Management, US Air. I made markets during the crash of 1987 and the bull market that followed. I left the market to manage money and pursue my own trading. And about 8 or 9 years ago, I teamed up with Proprietary Strategies, where all we do is teach and mentor students around the world in over 116 countries and in every state in the United States, all of the techniques and methods I've accumulated that have high levels of consistency. So in my 4 decades of trading, I know what works in terms of consistency and I know what doesn't. So why waste your time and money on a lot of things that really show no levels of consistency when I can tell you right off the bat what works and what doesn't? So we are an educational company, but we are first required by law to show you this before we begin our presentation. So please take a moment to view our disclaimer. I'm going to share with you a lot of performance results, a lot of charts today, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated. And once again, all examples are strictly for educational purposes only. Now, as you're taking one last look at our disclaimer, a lot of people are always asking me about our Twitter page, so feel free to follow us on Twitter. There's our handle right there if you're interested in following us. And you've been asking me, that is where you'd come to get our information. Every day I post different information from little bits of financial wisdom along the way to actual signals, strategies that our strategies have generated, I should say. So lots of great free information. Feel free to follow us on Twitter. All right, so as I stated earlier, we're a little bit different from other companies in that our only goal is to teach you how to trade with a specialist edge. This is the same edge that was taught to me when I first started trading some 41 years ago, and I struggled tremendously, and my trading didn't start to become consistent until my mentors taught me the same thing I teach my students. So hopefully they'll be able to sustain you the way they've sustained me going on 41 years now, okay? Now, since this is an educational webinar today, please wait till the end of today's class to ask any questions. I know a lot of webinars you may have attended in the past like to stop at every slide to answer questions, but if we do that, we'll be here far too long of the day, and I have a lot of information to share with you. I want to teach you. So if you have a question, please wait till the end, probably about another half hour from now, and then we'll reserve the last 10-15 minutes for questions. The only question I will answer is the most common, and that is this being recorded? Yes, it is. So we are recording everything today. If you have to leave early, or if you're having technical issues, you can't hear me or see the screen, don't worry. Many times if you log off and then log back on, it'll be corrected. It's just your internet connection. But if you're having difficulty or have to leave, we will provide everyone with a link to this recording, okay? So once again, we have a good crowd here today. If you happen to come in late, please hold off to ask any questions until the end. All right. Let's begin today's presentation. And what we're going to be talking about in our educational class today is strategy number 4. In fact, I'm going to give you 2 of the rules to this particular strategy. Excuse me. The strategy only has about 5, I believe 5, possibly 6 rules altogether, depending on how you want to trade it. But I'm going to share with you almost half of those rules today, all right? All right, so rule number 1. Buy signals can only be entered above the 50-period simple moving average. Remember I started off the presentation saying how simple trading is? It's that we make it overcomplicated. Well, you're going to be, you're really going to be surprised at how simple these rules are. But it doesn't take a lot to get you to be a consistent trader. So if you want to go long, you must be above the 50-period moving average. Now, it's okay if some of the price bar is below the 50. As long as your entry is above, that's a valid buy setup. As we see here in this generic chart, someone looking at this would say, well, Steve, there's really no trend here. I can't really tell what's going on, but the first rule is to add the 50-period moving average. And we ask ourselves, where is price in relation to that? Well, price is above, as you can see. So what is that telling us? It's telling us that the overall trend is up. And we never want to sell if the overall trend is up. Just the same way you would never want to swim upstream. I mean, that would be silly. You'd be exhausted and you'd hardly get anywhere. Well, trading is no different. You don't want to go against the overall trend. Now, you don't need some convoluted indicator. You don't need 2 time frames to be looking at. You don't need someone to be telling you in a chat room or on TV what the overall trend is. All you need to do is apply a 50-period moving average. It's that simple. It makes no difference what time frame or what market you're looking at. Now, conversely, let's say we want to go short or we want to get out of the markets. Well, sell signals can only be entered below the 50-period moving average, all right, the opposite side of the coin. Once again, someone looking at this would say, Steve, sideways market. We're always taught, the chat room I go to says never trade a sideways market. You're going to get whipsawed and lose money. Well, is this a sideways market? No, because you add the 50-period moving average and the overall trend is down. So the market is telling you, even though it may be paused here, that it's going to go lower or wants to go lower. Until it has consecutive closes above, it wants to go lower. So do you want to be a buyer? Or do you want to be out of this market if you're thinking about shorting? No, you want to look for sell setups. Why? Because the overall trend is down. If the overall trend is down, we will never buy below the 50-period moving average. Over time, you will see how these simple rules add consistency to your trading. And I'll show you a ton of slides later on. I'll show you how aware you can become of this rule. All right, let's go on to rule number 2. Let's say you are above the 50-period moving average. All right, so you know you want to be a buyer. The buy signal bars must close in the top 25% of the range. This is rule number 2. So what does this mean? Well, if we see a bar like this above the 50-period moving average, we divide by 4 separate equal parts, and if it closes in the top 25% and all the other rules come into play, all the other requirements are met, that is your setup bar. That's the indication to buy. Someone would say, well, why do I have to wait for a bar to close in the top 25%? Because that's the market. That's the market you're trading. Not some guy on TV or in a trading room, but the market telling you it wants to go higher on the short term. See, the overall trend is for the overall time frame, but the short-term time frame looks at the individual bar. We're getting all of our cues from the market, not from an outside source. So as we look here, we see that we're above the 50 and there's 2 bars that close in the top 25%. Now the first one went up a little bit. Now for all you know, these could be monthly bars and we went up for 6 months, but the second one really took off. So you see there's consistency in these 2 rules. And we can do the same thing to the downside. Sell signal bars must close in the bottom 25% of their range. So let's say all the rules of strategy 4 come into play and we see a bar like this. Well, we divide by 4 separate equal parts, and if it closes in the bottom 25%, that's our sell setup, our indication to sell. Why? Because the market is telling us on a short-term basis it wants to go lower. We're only following what the market wants to do. We do not look at interest rates. We do not look at volume. We do not look at support and resistance. These are all things that are basically outside sources telling you what they think the market's going to do. What is the market telling us? It's telling us on a tick-by-tick basis what it wants to do. All we have to do is listen. So, as we see here, we are below the 50. This bar closes in the bottom 25%. What's it telling us? It's telling us the overall trend is down. So we don't want to swim upstream and buy. That's a gambling mentality and a recipe for disaster. What do we want to do? We want to sell. And what's this bar telling us? This bar is telling us on the short term it wants to go lower. And as you can see, the market told you in advance what it wanted to do. These are 2 of the basic and most profound rules of strategy number 4, and you just got them for free. And you can start experimenting with them right now. You can actually build your own strategy based off this or apply them to your current strategy, and I strongly feel that you will increase your odds for consistency tremendously. okay? But let's look at some recent strategy number 4 examples. Now, remember, I just gave you 2 of the rules. A lot of you will be saying, well, Steve, where exactly do I enter? Where exactly do I exit? Where exactly do I stop? Well, I couldn't give you all that information. I'd be giving away all the rules, and that wouldn't be fair to the people that purchased strategy number 4 course. But I just gave you 2 of the rules, and you'll see them, how they applied to all these setup bars. All right, so let's look at our first example here. We talked about earlier in PSX. Now, why did we generate 3 signals here? Well, the first thing we did was we clicked on the buy sell line, because this is how we're going to apply it on our PTS Primo charting platform. We make it simple so that it's right there, one click away. And all you have to do is click on the buy sell line and click on 50-period moving average. Remember, the buy sell line is just the 50-period simple moving average, but it tells us whether we should be buying if the overall trend is up or whether we should be selling. So we click that on, and we see here that originally price was below, so we were looking for sell setups. But right here we had one price close above, another one close above, and another close above. Now, let's see if any signals were generated. We kind of have a feeling, we've just started to learn the course material, and we kind of have a feeling there's a setup bar here, but let's check just to make sure. So with our educational platform, you click on strategy number 4 in the green strategy tab, and the drop-down menu appears, and all you have to do is click on signal arrow to verify if there was a setup. As you can see, there were actually 3. They closed above the 50, and each bar closed in the top 25%. So the 2 rules I just taught you have been met. The other rules, which I didn't teach you, were also met. But you learned that in the course. And then, as you can see, the stock gained 16 points. Now, we do not know how high it's going to go. We do not know for how long it's going to be going up. All we know is that it wants to go higher. So in the course, we teach you different exit levels, different entry levels, different stop placement to meet your needs. Remember, you're in charge of your trading, not us. We never tell you how exactly to trade. We give you guidelines and benchmarks, but it's really up to you. And we give you all the different variables so that you can decide. That's how you become a consistent trader, by making your own decisions, not by listening to me and someone else in a chat room, not by listening to someone on TV, or not by buying some system that automatically tells you what to do. Those are recipes for disaster. All right, we look here in OC, someone saying, well, Steve, once again, there's nothing to see here. I mean, I don't know what this thing's going to do, and the earnings aren't coming out till next week, so I don't know what the institution's like. I'm going to stay out of this. Well, there is actually a lot to see here. You click on the buy sell line, click on 50-period moving average, and actually we're below the 50. Even though we opened above, we still closed below. So what's the market telling us? It's telling us the overall trend is down. So there is a lot to see here. By the fact that we don't want to buy anything, we don't care what the earnings estimates are going to be. The market is saying the overall trend is down. We're not a buyer at all until we have consecutive closes above the 50. All right. Now let's see if there was a strategy 4 setup generated. Click that on, the drop-down menu, signal arrow, and lo and behold, yes, because we closed in the bottom 25% and all the other requirements are met. So had you gone short at the end of that day, well, guess what? 6 points in 2 days. Obviously, some news or something came out where we dropped very strongly the next day. We had no idea that was going to happen. We just were listening to the market. The market was telling us it wanted to go lower. So why would we ever think of buying anything? Why would we think, well, the institutions are buying, I guess I should be buying? Or why would we think, well, that's his major support, I guess I should buy here? Or why would we think, well, that guy in the chat room likes this stock, so I think I should like it? Those are recipes for disaster. Take it from someone who used those same techniques some 41 years ago, and they didn't work then, so they're not about to work now. All right, some more examples. We're above the 50, closing the top 25%, and up a quick 4 points in TXT. This was in the first week of May. As we can see in COP, at this point, we crossed above the 50 in the end of March. A buy signal was generated the first week of April right here, and a quick 7 points coming into the end of April. eBay was oscillating below, then above, then back above, below again. But as you can see here, even though we had 3 bars relatively above the 50, we have a bar here that closed in the bottom 25% just below the 50. And it met all of the rules of strategy number 4. Remember, just because you see a bar close in the top or bottom of its range, or if you see it above or below the 50, doesn't mean it's a buy or sell signal. The other rules have to come into play. So there were no other rules that came into play until this bar right here. And had you gone short, well, guess what? coming into the end of May, first week of May, I should say, 5 points to the downside in eBay. How about VRSN? All right. This is a great example of how you can use this as a pullback strategy. The market started to pull back. At this point, it touched the 50-period moving average and generated 2 buy signals for a quick 10 points up in the next week. Then coming back, as you can see, as we went lower and lower, there were no bars that closed in the top 25% of the range. So that's the market telling you, I'm not ready to go up. Even though we're above the 50, it doesn't want to go up until this bar right here. It closed in the top 25%, and it met all the rules of strategy number 4, and then another quick 10 points to the upside. So you see, even though the overall trend is up, there were no bars closing in the top 25% of the range. That's the short-term market telling you it wants to go lower at this point. It's still in an overall uptrend, but we're selling off to a certain point. Now we look at WYNN, W-Y-N-N. We had a cluster of sell signals here, 1, 2, and 3, before the market finally started to sell off around 9 points. And we look at WYNN. Sometimes you will see just one signal generated for a very nice run up. As you can see in this one, we had a nice pullback. All the requirements were met. A buy signal was generated here at the end of April for a quick 20 points to the upside coming into the second week of May. All right, sometimes you'll see a very nice setup. It's quiet and you'll only get one setup, where other times you'll see a lot of setups. If you take in these very first couple of ones, that's still 20 points to the upside, but you would have gotten a lot more chances to go long. Some setups are better than others, but it all depends on the market and the volatility, but they follow the same rules. There's not a lot of alteration. We're not using discretion in terms of what market to trade. It's just up to us what we want to really be doing, following the basic format. Same thing with the sell side. Letter D generated a lot of signals to go short. Someone looking at this would normally say, well, gosh, Steve, I lost so much money on this stock because the program I bought likes to look at support and resistance, and look at all the points where it stopped right here. It generated support areas, but it kept going lower and breaking the support all the time. I kept buying. See, this is the way most traders trade, myself included. When I first started trading, I would think, well, there's support there. This is where all the institutions and the volume picked up to the upside. So it's going to hold. I better buy here. After all, we've come down a lot. We're tremendously oversold. Until my mentor said, Steve, there's no reason to look at that. There's no consistency in those methods. The only thing you have to look at is where is price in relation to the 50-period moving average. And as you can see at the very beginning of this, price was below. So there's no reason to ever consider, I don't care what some program says or what some fundamental news says or what some earnings report says, if you are below the 50, you don't want to be a buyer. You do not want to swim upstream. Every once in a while, you will get these fantastic setups that are bottom pickers and they're below the 50, or top pickers above the 50. And they will make you think, boy, that guy, Steve Primo, doesn't know what he's talking about. But remember, those are few and far and in between, because you won't see a lot of those. Every time you have one of those big hits, you'll also maybe have 5 or 6 major losses, and they'll give back everything you made on that big one. So what we're trying to do is instill consistency in our members around the world so that they can be trading 10, 20, 30, 40 years down the road. We're just not looking for one big hit and you can make a really good amount of money and then give it all back the next month. I mean, what kind of educator would I be if I taught you a method like that? But that's the way most traders trade. And once again, we look here at Netflix. This is a daily chart, a perfect pullback coming down to the bottom. We generated a buy signal and 40 points to the upside. One signal for a nice 40-point gain. Here's a great example of how you would have been enticed to go long as you see the market going higher and higher in letter W, but where is price? Well, it's below the 50. So even though it's going up, and you may have said, boy, I had a great buy here at the bottom, but Steve kept me out of that and I could have made a lot of money. Well, remember, you're going to be much more consistent if you trade in sync with the trend, because look what happened here. A sell signal right at the very top, and you could have potentially captured all that and more to the downside. So this is what we're looking for. We're looking to put the odds in your favor. Now, one last example here, BIIB. We are below the 50-period moving average. 2 sell signals generated and a nice 34-point move to the downside. These are all classic, very basic strategy number 4 setups. Now we can also use this as a trend identifier. Here is an example of 2 sell signals in the diamonds. This was in the end of March coming into April. Now, it stands to reason that if the diamonds, which represent the Dow Jones Industrial Index, was generating sell signals, don't you think that the market was going to go down as well? So if you were thinking of investing in the market, or maybe you were already positioned in the market, if you see 2 sell signals in the ETF that represents the market, maybe you might want to think about either moving your stops up or maybe selling a portion of your position, or just being very careful, because the Dow Jones fell 17 points in the next couple of weeks, which represented roughly about 1,700 points in the Dow. So rather than actually trade the ETFs, you could apply this to the spiders, to the QQQs, to the diamonds, to the Russell 2000 ETF, whatever one you want. Now, strategy number 4 is extremely consistent, as you've just seen. But losses, as with any method, are inevitable. Remember, as I told you earlier, you will see losses from time to time. For example, let's look at these examples in TRU. We have a buy signal generated here, and this one obviously didn't work. Depending on where you decided to place your stop, you most likely would have been stopped out and lost some money. But now price is below the 50. You have another sell signal here. So you say, well, Steve says, these methods work, so I'll go short this one. I'll buy some puts, or I'll go short the stock, and I'll make everything I lost back. So now you go short, and then this happens, okay? Or this. In Eric, we see that we are below the 50 period. In fact, none of the price bars are above. We got a perfect sell signal here, so we go short, and then this happens, okay? Or BMY, we see here that we are above the 50. Absolutely no price bars are below or touching. We have a nice pullback here and 2 signals generated to go long right here, all right, at the very bottom of the sell-off. So you're excited, you take those buy signals, and as we can see, once you get in, this happens, okay? So how can we increase our odds for consistency? Remember, you will still have some losses from time to time. That's inevitable. But strategy number 4 is an extremely consistent method. But how can we increase our odds even more? Maybe devise some type of filter, not to keep out all the losses, because we know that doesn't exist, but to keep out some of them so that we'll have a more robust way of trading. Well, in order to increase your odds, you need a tool that translates and confirms what the market wants to do. So in other words, we need something that is listening to the market as well, but a little bit more finely tuned. Listening to the market on a tick-by-tick basis so that it can translate what the market wants to do, and it can confirm a strategy number 4 signal. So in other words, a strategy number 4 signal is mainly based off pattern. It's a pattern recognition strategy. We're looking for specific patterns. And I just shared with you, one rule is to be above the 50, another rule is to close in the top 25%. Those are 2 important requirements of the pattern. But we need something that's translating the market that will confirm that pattern, okay? So what can we use? Well, you've heard me talk about that before. The tool that I have found in 4 decades of trading that confirms and translates what the market wants to do better than anything I've ever used, and it's something I use on a daily basis, it's the PET-D. Now, let me show you what the PET-D does. The PET-D is a proprietary tool. We keep the rules in-house, but it's a color bar algorithm that defines what the trend is better than anything I've ever seen. It defines the short-term trend because it listens to what the market wants to do on a tick-by-tick basis. So how do we find out what the trend is? Well, usually we'll see that something has been going up and we jump in. And the minute we jump in, it usually changes direction. Here's how we define the PET-D. We've made it into a color bar algorithm. And if the bars are green, if you see consecutive green bars, it's telling you that the market is in an uptrend, a short-term uptrend. Once you see consecutive red bars, you're in a short-term downtrend. It's that simple. And you say, well, Steve, there are lots of tools that do that. I can use a moving average crossover to help me do that. Sure, you can. But those are very late, and sometimes they're delayed. The PET-D is probably the best tool I know that really discerns what the trend is as soon as possible. For example, once we apply the PET-D, we see here at the very bottom that the PET-D was already telling us we're in an uptrend. And we see well before the market fell out of bed that the PET-D was telling us we were in a downtrend by coloring the bars red. So the beauty of it is that it tells you which direction you should be trading. And once you know that, you can apply any strategy to that direction. So how can we apply it with strategy number 4? All right, so once you get a strategy number 4 buy signal, you're only going to take that signal if that bar is colored green. In other words, we don't care what every bar before it was colored. We don't care what the prior bar is. All we care is that that bar with that green arrow below it is colored green. Now, conversely, if we get a sell signal, we'll only take that if that signal bar is colored red. So you get a red arrow, that bar below it must be colored red. That is the pet D confirming and telling you that you are in sync with what the market wants to do on a tick-by-tick basis. So let's use this combination, which we call the dynamic duo. Let's show you how well this works. This is why we call it our dynamic duo. All right, remember those examples here? We would have bought here and lost money, and sold here and lost money. Now they're both valid strategy number 4 pattern recognition setups. But how could the pet D have helped us? Well, all you'd have to do is click on the pet D tool in the upper green strategy tab of our platform, and it automatically changes the color. Remember, if we want to buy, that bar has to be colored green. As you can see here, it's colored red. So we wouldn't have taken that trade. And if we wanted to sell, that bar needs to be colored red, and it's colored green. So the pet D kept us out of these trades. As we always say, some of the best trades are the ones you never take. So right off the bat, we filtered 2 losses out of our trading portfolio. How about Eric? Well, we had a valid sell signal here, and we normally would have taken it because they're a high level of consistency in strategy number 4. But what if we want to increase our odds? Well, we simply add the pet D. Click on pet D, and in order to take this bar must be colored red. What color is it? It's green. So that's the pet D telling you that don't take this trade because on a tick-by-tick basis, the market is telling me that it wants to go higher. So don't take the trade, even though the pattern says we want to go lower. The actual market is telling us, using this proprietary algorithm, it wants to go higher. So you would have saved yourself another loss. And once again, we had 2 buy signals. They look perfect. They meet all the requirements. Click on the pet D, and what color is the outline of each one? Even though they both closed up in the top 25%, their outline is red, which means that the pet D is saying that the short-term trend is down. Do not take these trades. So we wouldn't have taken them and saved ourselves a lot of money. Now, one last example. Now, this one actually worked out, and this one didn't. How could the pet D have helped us? Add on the pet D, we see that the reason why this one worked is because it was in sync and being confirmed by the pet D. The outline is green. So we had the okay to take this trade and could have potentially captured 4 points. And we didn't have the okay to take this trade because in order to buy again, we need this bar to be colored red, and it was colored green. You see how powerful this is? When you add these 2 together, they create our dynamic duo. So let's look at some more recent dynamic duo signals. These are as recent as last month to even the last couple of days, okay? Okay, 2 buy signals in BR 2 weeks ago, the beginning of May. We're above the 50. We're closing the top 25%. But let's add the pet D. And what is the pet D telling us? The pet D is telling us that we've been in a short-term downtrend well before we got those buy signals. Even though the overall trend is up, the short-term trend is going lower. So we should not take these trades, and we don't take anything. But a day later, another signal is generated, but this time its outline is green. So now the pet D has changed its mind. It says, you know what? I decided I want to go higher. And the pattern meets all the requirements, so this is okay to buy. 10 points in 5 days, okay? So this is how the pet D can really refine your trading entries. It can really help you to decide whether you should be taking that trade or not. Here's another example, a sell in letter T. Okay, it's below the 50. It closes in the bottom 25%. We simply add the pet D, and it's confirmed because the bar is colored red. So we fell 4 points coming into the first week of May. Another sell signal, this one in BBBY, okay, we're below the 50. We close in the bottom 25%. So strategy number 4 rules are met, and it's colored red once we had the pet D. So it's okay to take that one. A quick 5-point drop, and it stayed lower in the first or second week of May. About some buy signals in fossil. Okay, here's a buy signal, and here's a buy signal. All right, which ones would we have taken? Both? Neither? Well, in order to know, we would have added the pet D, and we see that we wouldn't have taken the first one because it was outlined red. So even though it kind of went sideways to higher, it really didn't go up much. And then finally we have a buy signal that was colored green. So that's the one we would have taken, and quick 5 points coming into the second week of May. How about IBM? All right. A lot of traders don't like to trade this way because they feel, Steve, we were trading up here and had a large gap down. I know we're below the 50. I know we closed in the bottom 25%, so that's a valid sell signal. But what's the pet D telling me? Well, the pet D is saying we're going to go lower. So if you don't want to take that trade, you don't have to. Remember, this is not a system, but we're just trying to put the odds in your favor. And IBM went down an additional 8 points after that. And if you wanted to get in even again, if you missed that, well, there was another signal generated at the end of April. How about DVN? 2 buy signals generated above the 50 in the top 25%. But let's say you're a little weary of the market. You're a little scared to get in because maybe the market doesn't feel right to you. All you have to do to add more confidence to the trade is to apply the pet D. And you can see that all the bars from the beginning of this chart to the signals are colored green. So we've been in a short-term uptrend the entire time. So if that's not confidence enough, I don't know what is. So it's up to you, but that would have been nice 6 points coming into the 14th of May. How about letter K? Now here's a cluster of sell signals. Oftentimes, it's not guaranteed, but oftentimes if you see a cluster of signals, either buys or sells, like in this case, and nothing has happened yet, that may be a sign of the market coiling before it goes in that right direction. Just to make sure you apply the pet D and see that each and every one of these bars is colored red. Even when you had up days, as you have here, that's an up day, the outline is red. So this is telling you that the overall trend is down because we're below the 50, and the short-term trend is down. But these are very valid setups to go short. And you can see 9 points eventually kicked in coming into May. Here's a cluster of 2 in CVX to go long. They're both validated by being green outlines with the pet D, so it gives you the confidence to take them. Quick 8 points coming into the 14th of May. Another cluster of 3 sell signals that was recently generated in letter DE. This was in mid to end of April. We're below the 50. All the rules are met. These are 3 valid sell signals a day apart. And once you apply the pet D, you see that each one was colored red. In fact, even on these up days were colored red. What does that mean? It's just telling you that that's an up day in an overall short-term downtrend. Just the same way in the middle of winter, when the majority of the days are cold or rainy, every once in a while you will get a sunny day. Does that mean it's summer all of a sudden? No. It just means that this is a aberration. It's kind of like a pullback in an overall downtrend. It's the same way with the stock market. You'll see up days, and does that give you the false pretense to jump in and go long? No, because they're still outlined red. So you could have had the confidence to go short and 18 points to the downside. And then INCY, here's a signal that is kind of a little bit more advanced because it was originally below, then above, now back below the 50-period moving average, but it generated a valid sell signal. Excuse me, a little bit more advanced, but still valid. It met all the requirements. If you're still unsure, just add the pet D to confirm, and as you can see, this bar was colored red. All the bars prior to that were colored green, but we don't care about the prior colors. We just care about the color of the bar with the arrow attached to it. So once we see that we have the confidence to take the trade, 28 points coming into May. Okay. All right, so let's recap before we go into question and answer portion. Remember, apply the buy-sell line. What is that? Well, that's the 50-period moving average. And remember, ask yourself prior to any trade, where is price in relation to that 50-period moving average buy-sell line? If price is above, that means the overall trend is up. If the overall trend is up, you do not, I repeat, you do not want to sell anything. Why? Because over time, you will only show losses for that. You won't have anything to show for it. If price is below the 50 period, the overall trend is down. You do not, I repeat, you do not want to buy below the 50. Why? Because over time, you will not show anything for that. The odds are not in your favor of being consistent. All right? Once you see what side of the fence you're on in terms of the buy-sell line, you want to look for bars that close in the top or bottom 25% of the range, because that's the market in the pattern, excuse me, telling you that it wants to either go higher or lower. Now, these 2 rules make up one of our most consistent strategies, a strategy I've been using almost every day for 41 years. That's strategy number 4, our most consistent and most popular strategy to date. because it can transfer so easily onto any market and any time frame. Now, once you become a member of strategy number 4, if you want to increase your odds for success, you simply add the pet D. That will confirm the strategy number 4 signal to tell you whether you should take it or not, and you will increase your odds for success. And lastly, we showed you how simple it is to use all of these techniques, all of these methods, by simply clicking on the desired indicator, the desired tool on our new PTS Primo charts. I designed this with proprietary strategies to make it as simple as possible. Remember, trading should be simple. So, as we go into question and answers, I'd like to ask you a question. Do you think these edges could have helped your trading this past year? In fact, I'd give you a little assignment here. Go back and look at your last 10 or 20 trades and apply the 50-period moving average line, okay? And see what your results were. And see if you were in line with that 50-period moving average. I can almost guarantee you that you had losses because you were buying below the 50 and selling above. All right, we have a great offer, a great discount for all the people attending today. I want to spend a few seconds talking about it. We're going to offer you our dynamic duo special, okay? That is strategy number 4 along with the pet D. That's a Primo early trend detector, all right? You're going to get instant course access. This is online course access, 20 videos telling you all the exits, all the entries, all the stop placement. Remember, we didn't talk about that today. You're also going to get the add-on for the signal alerts. This comes with the Pet D add-on, which will automatically color your charts either green or red. And we're also in the Pet D, giving you the Pet D course, which comes with 4 specific trading techniques, how to trade with the Pet D, all right? And included in all this comes 41 years of mentoring experience and correspondence. You can be able to email me whenever you like with any questions. Now, what we're going to be giving you can be applied to just about any of the major platforms around: TradeStation, Metastock, Thinkorswim with NinjaTrader, MT4, Sierra Charts. So you can use this in about anything. But remember, we want to keep it simple for you. We want everything one click away. So we're also throwing in 6 months of our PTS Primo charting platform. That's where everything was designed to be one click away. Now, 6 months will normally cost close to $1,000, but you're not going to pay $1,000. In fact, you're not even going to pay anything. We're throwing in 6 months free usage of the PTS Primo charting platform. Let me show you what's included in this offer. Obviously, you're getting strategy number 4 along with the Pet D trend identifier. We're throwing in 2 extra entry techniques that are designed to fine-tune your entries. It comes with over 90 technical indicators, so you can experiment with different things if you'd like. And it also comes with an extra bonus, which I want to spend a few minutes talking about, our signal scanner. You can scan on a nightly basis for setups for the next day for the Pet D along with strategy number 4 for our dynamic duo. Let me show you how simple it is. Once you click on strategy 4, you would click on the strategy tab and click on scan, and this page will appear. You hit load symbols. You can choose from ETFs, stocks, currency pairs, futures, forex, anything you want, and you'll see whatever list you decided just appear in a matter of seconds in the spreadsheet. Then click on scan, and in about 20 seconds you'll see a list of either green or red bars. The green bars mean that that's a buy signal for the next day. The red bars mean it's a sell signal. And this whole process takes less than a minute or two to do on a nightly basis. Now, let's say you had this platform, or what we're offering you today, our special discount, a couple of weeks ago. You could have scanned on the night of May 4th and seen that there was a buy setup in UPS for strategy number 4. Okay, as you can see, the 2 rules were above the 50-period moving average, and we closed in the top 25%. So, strategy number 4, all the rules came into play. There was a green arrow under there, and that was on the night of the 4th of May, just a week or so ago. Excuse me. Now, let's say you're thinking, well, I'm not really sure about the markets. I really don't know if I really want to go long this or buy some calls. You know, you don't have to buy the stock. You can purchase calls, whatever. You can get some type of long spread strategy. It's entirely up to you. But if you want a little bit more confidence, you would simply come up here, click on the Pet D, and it automatically changes the colors. As you can see, what color is the outline? The outline is green. So that is the Pet D confirming that that is a high probability setup. This was on the 4th of May. So you could have purchased on that night or the next morning, and you can see coming into the 14th, 15th, It was 8-point gain in just about a week or so. This just happened just a couple of weeks, and you see these happening over and over again. So the scanner comes included with your 6 months free usage of the platform. But we realize that we kind of have a technical bias. We know that we're coming from a technical point of view. So if you like to listen to news, if you like to look at earnings, we've devised a way to do that for all of our members. We had our programmers who designed the platform with us put in free Bloomberg TV. So all you have to do is click on the media page icon, and you'll see a screen like this come down on your platform that you can minimize and look at the charts, and it's live Bloomberg TV. Anytime you want to look at earnings reports, economic announcements, or just find out what's going on fundamentally in the world or the marketplaces, you'll have live media coverage. So that this is happening as well on your 6 months usage. And this all comes with personalized tech support. Anytime you have an issue or problem, they'll be right there to help answer anything you have. So this dynamic combo plus 6 months PTS Primo charts usually actually costs a lot of money. In fact, let me break it down for you. Strategy number 4, if you purchase it by itself, would roughly cost you about $700. Not that much. The PETD, if you purchase it separately, costs you close to $3,000. And the PTS Primo charts for 6 months would cost you close to $1,000. So altogether, this would cost roughly about $4,600, $4,700. But don't worry, we're not going to charge you that at all. We're going to discount it tremendously down to $29.95, which includes the 6 months PTS Primo charts. But we're not stopping there. We're also including payment plans. So if you can't come up with $29.95, that's okay. You can still put down a small deposit and be up and running with the 6 months platform along with the dynamic duo. So this is a great, great offer. I can't think of a better way to get your trading on track with something that I personally use on a daily basis. So here's how to take advantage of this. Contact my sister site, Pro Trader Strategies. I developed the platform with them. They can answer any of your tech support questions about how to use it or costs or discounts. You can email them or call them directly. I personally would call them directly at 310-598-6677 because they have trading consultants manning the phones right now, and they'll be happy to answer any question that you may have. And there's no obligation, and they'd be happy to answer anything about the tech support or about the actual platform or anything else concerning the discount or the putting together some type of payment plan. Now, the link you see at the bottom will take you to that $29.95 sign-up page if you're definitely convinced that that's what you want to do, have a one-time payment. And that's not a live link, though. You'd have to copy and paste that onto your browser. But in the chat section on the far right-hand corner of the GoToWebinar column, they have posted a live link. So all you have to do is click that on, and that link will take you right to the sign-up page, okay? So I'm going to leave this information up here as I open up the question and answer box to answer any of your questions. And I see we have a few questions here. Hank is saying, you are so right. I assume you're saying I'm so right about the 50-period moving average, and that, yes, that really does help. The one thing, I know it's kind of cliche now because I've said it so many times, but I really feel strongly about this. I've said this because I use this on a daily basis. If I were stranded on a desert island and I can only use one trading tool, it would be the 50-period moving average of the buy-sell line, because it's kept me out of so much trouble, and it's also helped me make money or be consistent by getting me on the right side of the overall trend. And that's not something you have to pay for. It's right there. But on the platform, we have 4 different ways how to view the buy-sell line. We have background color charts. We have a fluid buy-sell line. We have a lower ribbon on the bottom of your screen. So it makes it really simple so that you don't have to forget or remember to add the 50-period moving average. It's right there for you, okay? People are asking about the correspondence. Yes, if you ever have a question concerning trading, concerning strategy number 4, and you're not really sure exactly how to a signal is generated or where some of the rules are for exits or entries, you can always email me, whenever you like on the weekends, prior to market opening, after the market close. It makes no difference, and I'll get back to you as soon as possible. This is the way I can make sure that you're learning the strategy properly and that you're on track to becoming a consistent trader. We have so many traders that, will become a part of this program, and they'll say, Steve, this doesn't really work. I want a refund because, every trade I've had is a loser. And I'll say, you never emailed me and corresponded with me. Can you share with me some of your trades? And inevitably, whenever I get the snapshots of their signals, the way they traded it, they were implementing the strategy incorrectly. You know, they weren't looking at the PET, they weren't applying the PET properly. Even though a strategy was generated, they were implementing it incorrectly or exiting at the wrong point. They weren't using the different exit levels we teach. And so what I always tell people is that most of the time we have a lot of people that lose using our methods because they're using them incorrectly. So I'm here to help you. I have 41 years of experience knowing how to trade these. I can't think of another educational company or another company that has that much experience behind it that will help you in learning how to use this. And I can shorten your learning curve. So if you've been struggling, if you're even just treading water, you know, it would be in your best interest to talk to someone who's gone through it already, who knows what it's like, and who's been there for over 4 decades, who can really turn your trading around. And the methods are really, really simple, okay? Another question, for scanning, do we have to buy the data? No, this is all included. I mean, you're getting the data and everything included with this. Now, remember, after 6 months, I'm sure there will be some costs, and you can decide whether you want to go on after that. But we provide you with the data or with the market, and that is more of a tech support question. So if you have any more questions about that, David, just email or call Pro Trader Strategies. There's no obligation, and they can answer any and all of your questions concerning tech support and the actual platform, okay? The way we configure it at our companies, our 2 companies, is that I handle all the teaching and education and ways in which to elevate your trading, and they handle all of the tech support and data issues and discounts of the courses. So it makes it simpler, and you get your questions answered a lot quicker. So it's much more finely tuned that way. That's a great question, but right off the bat, no, you'll get all the data and everything included with that. And that's 6 months. That's a really, I mean, like I said, that would normally cost you close to $1,000 to pay for that, the platform and the data, and that's all free, okay? Okay, as we conclude, I hope you got something out of this. I showed you a ton of examples that were maybe a month or 2 old, and I also showed you examples that were last week. So just to make sure that you understand, we're not cherry picking and picking things that worked 6 months ago. These setups are being generated on a nightly basis. There are dozens of strategy number 4 signals generated, and the way to fine tune and filter out the best from the others are through the course, what I teach you, as well as by applying the PET-D. You can finally get your trading back on track, and you'll see how simple it is to be in charge for the very first time. With the things we teach, you won't have to rely on anyone or anything else. You'll have all the tools and information you need, all the strategies and techniques, and once you learn the process and you feel you have it under your belt and you feel confident to really actually trade with real funds, you'll see it's just the greatest feeling to know that you're in charge of your financial destiny. So this is what we're trying to instill in you, and this is why we make it so simple by really giving you this great discount, okay? So do yourself a favor, contact Pro Trader Strategies. As I suggested, I would call them and try to put together a payment plan so that you can just be up and running with a small deposit, and I can start teaching and mentoring you right away, okay? In conclusion, I want to say thank you so much for attending today. I hope you got something out of it. I hope you got a little insight into how consistent you can actually be as long as you keep your trading consistent. So thanks so much for attending today. I wish you the best of luck as traders, and mostly I look forward to all of you becoming students of mine at the Dynamic Duo course, along with using our PTS Primo charting platform. Thank you so much. I'll see you next time. Bye-bye.